Welcome, everybody. First off, let's go with this disclaimer. Past performance is no guarantee of future results. There's no guarantee of future performance. All investment involves risk, including risk of loss. And lastly, this is clearly educational only. So, let's start. Welcome to Jam Capital's first initial video. Specifically going to speak about Forex and specifically the Australian dollar against the Greenback. On March 3rd, the Australian GDP quarter over quarter is going to be released. Whether this has an impact on its currency or not, whether it's bullish or bearish, I cannot make that prediction. But I do predict there will be some sort of volatility within this reading. Here we have a linear scale of the Australian GDP actual. And we can tell with this top trend line, it's likely to see a breach, and the bottom trend line here likely to see a short-term breach, meaning the forecasts are not accurate and we will be getting surprise readings. Being that, as you can tell here, the forecast within this parallel trend line is seeing a optimistic reading out of it, and I expect this quarter to have a optimistic reading as well. So let's look at the actual daily chart of the Australian dollar against the Greenback. Here in this chart we have intermediate A has been completed from May of 2005. We have its intermediate B completed roughly at the end of November of 2025. We have a minute 1 completed, minute 2 completed. Current price is a minute wave 3. As I was speaking to you about March 3rd being the quarter over quarter GDP reading, until then, I think there's a few different support levels that we need to look at. One support level being 0.7. Reason I say that is this move right here should have an opposite move, and we see resistance levels of 0.73. The 0.73 is ultimately going to be our first level of resistance. If we see a thrust through that, it's more than likely we see 0.78 or possibly 0.8 as a ultimate longer term resistance level. If the 0.7 support level gets breached, 0.6920 becomes our second level of support, and it goes in conjunction with the lower degree wave 4. Now ultimately, if those two get breached and we see anything near 0.6685, it's more than likely that we will be seeing a massive strength in the US dollar, which could very well likely be. So now that we see the daily chart, I think it's very informative if I show you some counts that I have made. So this right here is my preferred count. This minuet 1, minuet 2, minuet 3, and then I have the 4, minuet 4 going down to the 0.69, what was that? 0.6920, maybe just a little touch under. It's going to be in that rough vicinity. After that, I have it going back above 0.72, which is its fifth minuet wave, And then after that, we would likely see a breach of these two support levels somewhere almost filling the gap right here, which makes the most sense to me. So that's one count. That's my preferred count. Let's look at other scenarios that could possibly be. Here's another situation. Well, in this case, the minuet 5 has already been completed, and its minor C has been completed already in this case. So from here on out, we would see a ABC correction or a WXY. In this case, we have a ABC, which the A is completed with a flat correction, A, B, C. Here's our minuet A. This is its B, and then this is its C in the summer of 2026. So basically what this would be showing is a tremendous amount of volatility, which is, in Forex, quite possible. All right, let's look at another possibility. And in this case, what we're seeing here is not a completed fifth like we saw in the others with the C. This case, we're seeing an extension, meaning there's more growth involved. More people are coming in. So what we're seeing is a lower degree of this red, lower degree 1, lower degree 2, extension in 3, 4, up towards 0.78 and or possibly 0.8. Finally, the last count is something along the same lines, as it would be an extension. There would be a lift towards 0.76, 0.78, or 0.8. I appreciate your time, and I look forward to the next video. Thank you.